Good morning, market movers for Monday, January 6, 2014. First full week of the year, it's going to be a busy week for data. We've got the ISM Services Sector Index coming out, factory orders, and a lot of other data. Most importantly, on Friday, we'll have the jobs report for December. And that'll be a good indicator in terms of the Fed of whether they continue to taper into February. Of course, if you recall, we're reducing Fed stimulus by $10 billion a month starting this month. So we're going from $85 billion last month to $75 billion this month. If the December jobs report looks negative, meaning we don't get as many jobs as we're expecting, they're expecting 190,000 jobs added. If we get less than that, maybe they wait in February and don't taper further. If jobs come in pretty strong at that number, around that number, or better than that number, we could very well see additional tapering. We may see more tapering anyway. Janet Yellen should be getting confirmed this week, probably by the Senate, and she obviously will be taking over from Bernanke this month if that happens, which is pretty much a guarantee. And I think she's going to be fairly aggressive about pulling out of the market, so to speak, on the stimulus side, tapering further. Definitely getting that done this year, but depending on what happens with jobs in the economy, we could see the tapering process happen a lot quicker. It may not take till the end of the year, for example. Maybe it only takes till mid-year to get completely out of the market in terms of stimulus for the Fed. So we need to keep an eye on that. So lots of data this week. The market opened relatively flat. Twitter got downgraded. One other quick thing, we don't talk about bonds all that much just because the stock market's been so active, but the munis had the worst market since 1994 last year, worst performance since 94, down 2.6%. This year doesn't look much better. We had problems in Detroit, as I'm sure you know, and also in Puerto Rico, pretty severe financial issues there. So a lot of people concerned about the muni market. That's making it extremely difficult for cities, municipalities to issue new bonds. And as a result, the market, people just backed away from that market. The rates are low. People know rates are going up. Performance for bonds in general and for munis especially is going to be very difficult going forward. And of course, that has implications for a lot of other areas of the market. More to come. Thanks for watching.